I'm Dave Mecklenburg from TigerSharkTrading.com. Before we begin, I want to remind you there's a high degree of risk in trading. If you've been trading for more than one day, know that you can and will lose money trading. Only trade with money you can afford to lose. Just three quick announcements if you're new here. Number one, the recording goes out 1 hour after the event. If I personally host an event or give the presentation myself, you'll get that email with the recording 1 hour after the event is scheduled to end. Two, we have a few events per week on all topics. I'll do a presentation on Wednesday, likely here, and have a guest on Thursday. And you get those invites uh, either tonight or tomorrow to attend those events. So again, all these events may not be applicable to the type of trading you're doing, but there's always big picture ideas that you can apply to any type of trading. And then three, this is an ad-supported website. I don't run any one-click opt-in ads, so feel free to check out all the links and all the offers in the newsletters. You may be supporting the website simply by clicking on some of these links, and I encourage you to do so. So let's get started. Our presenter today is a former Army officer and helicopter pilot. He has more than 20 years of experience in the markets. You can find him at TraderShark.com. Please welcome Brian Rehler.
Hey, good afternoon, everybody. Thank you, Dave. I appreciate that. Welcome, everybody. I thank you all for taking the time out of the day to listen to a presentation on the 5 key elements on how to trade the S&P E-mini futures. And again, you can certainly apply a lot of these methods to any other type of trading you do. So without any further ado, I'm going to have a section towards the end where if you have any questions, I'll open it up at that point. So again, as Dave said, TraderShark.com. We're not necessarily associated with Tiger Shark, but Tiger Shark and I, we've worked together several times before, and Dave offers an awesome presentation platform. So what we're going to do today is learn how to day trade the E-mini S&P futures. I'm not a long-term trader. We're usually in and out in a few minutes. Again, not swing trading the S&P E-mini. So Tiger Shark Trading and TraderShark.com presents 5 key elements. My apologies. 5 key elements to market timing. I think you'll find it interesting. We're a lot of meat and potatoes, not a whole lot of stories. I'm going to tell you right to the point. Disclaimer: just as Dave said, we want to be very careful with any type of investments. Please consult your financial advisors, brokers, anybody prior to investing any money, and you can lose more than what you've initially invested. Past performance not an indication of future results. Please make sure you understand this disclaimer. So what are we going to do today? We're going to learn about 5 market timing elements. Sounds pretty cool, pretty basic, right? Time plays a critical role. A lot of people don't really pay much attention to the clock, and you're going to understand why here in just a little bit. Key support and resistance levels. Again, this is great for stocks, options, futures. We're going to primarily focus about futures market today. Trade what you see, not what you believe. How often have we seen the market move one direction or another direction, and our mind is telling us to place that trade just based on what we saw, so or what we believe. We believe it's going to go a certain direction, whereas we use the indicators to give us that impression as to the direction that we want to move. So in other words, trade what you see, not what you believe. We try to avoid the emotions as much as possible. Key lessons to help avoid becoming shark bait. In other words, I'm going to tell you some ideas on how to avoid getting in during the choppy time frames of the day. Who am I? No comments about the pictures, okay? This is probably 8 years old. I got a few more gray hairs, probably a few more wrinkles. That's my name, Brian Rehler. I'm a trader. I've been trading for over 20 years, probably close to 25 years now. Stocks, options, forex, and the futures market's kind of where I ended up resting my head. Mortgage broker for over 20 years, so I do understand the bond markets and how they affect the interest rates and what happens on FOMC announcement days. Kind of helps a little bit into our Shark Den room. I was an Army officer. I was a medevac helicopter pilot off in Desert Storm many years ago. It doesn't seem that far to me, but to other people they go, wow, you're really old. Professional life coach. I was trained by a very well-known life coach. I'm not allowed to mention his name, but I just want you to understand that I am a professionally trained life coach. A lot of people will tell you that they're coaches, but they don't have any professional training as to how to help that person improve, whether it's life situations or trading. A quick story on that is people want to learn how to become better traders, but quite often it may have an effect on their family life, their eating habits, their whatever other type of vices they have can certainly affect the way they trade. What's our objectives? We're going to create a core group of like-minded traders helping traders. Apply commonly used indicators. There's no proprietary indicators that you have to buy. I certainly don't tell everybody how I create the shark bands, but you don't need them to be a successful trader. And you can do it inexpensively. It's not charging thousands of dollars to get into a room. And there's no long-term commitments either. Help reduce one of the biggest in traders, and that is what? Over trading. What's another one? Slow you down to think before you click. So how many trades do we take a day? Well, that can range anywhere from 0 to maybe 8 or 9 trades. Average maybe 2 or 3 trades a day. And we generally trade mainly from 9:30 to 11:30 Eastern time. Provide a unique trading environment and a live trading room for new and experienced traders. So you're hearing me live. I also have a partner, Art Dill, and he does a fantastic job. And we interchange days, so you get a little bit of different perspective from different traders. Mind sharing. I'm an extrovert by nature. Everybody says, why, if you're successful, why would you do this teaching other people how to do it? Well, I'm certainly not making a lot of money on the Shark Den. I do make a little bit. I also sell trading manuals, but you'll notice that I'm not charging a whole lot of money. So I'm an extrovert by nature, being a mortgage broker. I like talking to people, and I'm stuck behind a computer screen. So I enjoy talking, and this type of presentation, this fits my nature. So that's one of the reasons. Number 2 is I really believe this success comes from a team approach more than an individual approach. In other words, traders helping traders. I certainly don't see everything that's going on during the trading day. So other people may point it out, hey, look, there's a shot across the bow. Hey, look, there's a hook pattern. And that's great. I really like that team approach. Profit sharing, I certainly believe contribution back to other organizations that you select. You don't have to use these. I contribute to the Russell Home for Atypical Children and Clean the World. Also the Wounded Warrior Project. So certainly select your own charity, and as you grow, contribute back to society. Let's take this step by step. After you place a trade, I know you've probably even seen some of these pictures. I recognize some of the names of people that have been here before. Have you ever felt like this? We do almost every time we press that keyboard to enter or exit a trade. This is the way we feel. Right? What is that? That's uncertainty. We don't know whether the trade's going to be profitable or not profitable. So what we want to try to do is to avoid that uncertainty, and we place trades based on probabilities. Why? Why do people feel like that? We are told that approximately 90% of traders consistently lose money, and probably more than that. Mostly because they trade without a specific plan, without specific entries, without specific exits. Are we going to hit every single entry and exit? No, of course not. Are we going to make a profitable trade every single time? No, of course not. If your expectation is 100% trading, 100% winners, this may not be the avenue or the direction you want to be trading. You want to be doing this for a business, because this is what we try to do. We try to help educate people and trading for a business, trade for a lifetime. And you're going to learn a little more about that in just a second. 5 keys to market timing. I apologize if I clear my throat. I'm actually going to put a lozenge in. Not a good idea. If you hear me clear my throat, I'm coming off a little bit of a cold. 5 keys to market timing prior to entering a trade. Time. Really? Yes. I simply use a clock. And this is over many years of overlays of charts after charts after charts of the clock. And floor traders aren't rocket scientists, right? They don't want to be. They don't have a pocket full of indicators. They're on the floor. I mean, of course, I know our trading floor has dropped down to almost 20% of where it used to be, but that's the only way we can commonly think. Aside from trading against computers, we have to think of it from a common sense perspective, right? They don't have multiple monitors. The computer systems do, right? They watch time, price action, and volume, which is exactly the same thing that the computers are doing. They use algorithms, high-frequency trading, flash orders, dark pools, iceberg orders. Really? All those things are against us as day traders. We're supposed to be able to come in and be successful. Dark pools, you don't see them. I'm sorry, dark pools are occurring overnight session. Iceberg orders are appearing, you only see the surface, you only see the trades that are out there, and once those trades fulfill, then other trades are triggered to fire off behind that. How are we supposed to compete against that? I'm going to show you some cool indicators on how to do that. So how do we beat them at their own game? I mean, we're the small guys. We aren't trading millions of shares, right? Time is the most important factor in determining market movements, and by studying past records of individual stocks, you'll be able to prove to yourself that history repeats itself. And in knowing the past, can actually tell you the future. There's a definite relationship between time and price, and that's William Gann. Let's go through, you don't need to remember all these. I put them in sequential order, but what are the time sessions? It also helps you with discipline. In other words, we get so scattered, the market opens up at 9:30 in the morning. Again, everything we're talking about is in Eastern Standard Time. That opening 9:30 to 9:45 is a time frame that everybody wants to get in because there's so much energy and buying and selling, and you see the market moving. If we can remain calm and understand that first 15 minutes, actually the first half hour, you'll know a lot of professional traders don't even step in until about 10 o'clock. Pre-market, 8:30 to 9:30. We certainly can trade here. This is not one of the areas I prefer to. This is the first hour before the market opens. Session 1. This is our primary trading time frame, 9:30 to 11:30. After 11:30, I'm pretty much done for the day. I may come back in the second afternoon session into the close. Just depends on what's going on for that day. Midday zone. Again, why do we have these breakdowns on time sessions? It gives you peace of mind. It doesn't burn you out instead of sitting in front of a computer for 6 hours straight. If you discipline yourself with the clock, that's almost a forced discipline, right? 11:30 to 1:15 is called, I refer to it as the lunchtime trading zone. If you want to trade, more power to you, but the volume drops down really quickly and a lot of sideways chop. Session 2, from 1:15 to 3:30 in the afternoon, right? 13:15 and 15:30, those are military times, but it's 1:15 to 3:30 Eastern time. Market close. Hey, right there about 3:20 to 3:30 until 4 o'clock. Futures market stays open till 4 to 4:15. I certainly would not encourage anyone to be trading during that time frame. Reversal zones. It's good to know this. 9:50 to 10:10. Hey, wait a second. I always thought that 10 o'clock was a reversal zone. It's a designated reversal zone, yes, but I use a specific 9:50 to 10:10 because that kind of gives them leeway. If there's too many people leaning one side or the other, they can stretch it out to 10:10 before they have that reversal, and it can catch a lot of people off guard. 10:25 to 10:30. Again, people refer to it as the 10:30 reversal zone. 1:15 to 1:30. I'm generally not trading during this time frame. Do you notice one thing right in here? There is no 11 o'clock reversal. Keep that in the back of your mind. There's no 11 o'clock reversal. 3 o'clock to 3:10. Another afternoon trade. Again, I'm not a big trader in the afternoons. And right into the close, the last one is 3:30, 3:25 to 3:30. Markets tend to trend. I think Dave's also making a copy of this for you if you're not able to write these down. Market tends to trend. This is important. Do you think that if you don't want to trade that first half hour, trading maybe from 10:30 is an opportunity and 10:30 to 11 is another opportunity? If you just have those two opportunities and you know that it's trending during those time frames, you think that's a wise choice to discipline your own approach to being only entering 1 or 2 trades during those time frames? The hardest thing is not to trade, really. 10:10 to 10:25. I refer to this as the 10 to 10:30 time frame. This is a trending time frame. If the market starts to move, this is one of the areas it'll start to move at. 10:30 to 11:15, another area of a trending time frame from 10:30 to 11:15. Ooh, look at this. So not 10:30 to 11, 10:30 to 11:15. Watch this. Watch how they'll work their way up to price action at 11 o'clock. And will there be a reversal at 11 o'clock? They're going to try to give you a head fake, try to sucker in a lot of people to fade that move and watch for a push up and then continue to stay in that trend direction until about 11:15. This is probably my favorite time frame. Not probably, it is my favorite time frame, 10:30, 11:15, and I really like to hold, if I can, through 11 to 11:15 time frame. This is where you'll make your larger profits. 2:15 to 3 o'clock, another trending time frame, another area that I don't really like to be trading in. 3:10 to 3:25, another trending time frame. No trade zones. Okay, here we go. 9:30 to 9:45. Hey, wait a second. 9:30 is when the market opens. That's right. We have this as what's called an opening range. And this is a time frame that they are kind of testing the market. They may push it up 2 to 4 points in one direction, reverse it quickly. They are taking the newer traders' money out of the market. And sometimes I've heard these guys refer to it as taking money or taking candy from a baby time frame. So, if you're a new trader and just starting, I would recommend you just observe from the 9:30 to 10 o'clock time frame, and then maybe jump in around that 10 to 10:30 time frame. 11:30 to 1:15, this is called the lunchtime trading zone. Please keep in mind, we're referring to a no trade zone. This doesn't mean that you can't trade there. It just simply means more of a, I should change this to cautionary time frame to trade. 11:30 to 1:15, what happens? Hey, the big boys step off the floor. The big boys are no longer watching the market. This is a time frame that I prefer not to trade. I will step in. I mean, there could be certainly the way we have our setups. There are nice, clean setups that occur during the lunchtime trading zone, and some of the traders in our room do stay through the whole day. And you're certainly welcome to do so. We do keep the room open the whole day. 3:50 to 4:15. This is another time frame that, you know what, by 10 minutes to 4 o'clock in the afternoon, I really don't want to be getting in. They're positioning themselves to take advantage of the Globex market or on into how they're going to trade the next day. So I don't want to be trading against the big boys at that point. Special zones. Ooh, make a note of this one, right? 1:30 to 2 o'clock. 1:30 to 2 o'clock, the market tends to rise. I didn't say that it always rises. It tends to rise. It's got a tendency to rise up into the close of the bond market. So we want to kind of watch how this is manipulated in the price action. Again, you're going to trade what your indicators tell you, not what you believe. So we're setting this up step by step. 1:30 to 2 o'clock, kind of watch for that market to push a little higher. And then at 2 o'clock to 2:15, what happens in through there? I am seeing this time frame stretch a little bit from 2 to about 2:30. But the market, if you're at the highs of the day, the market will tend to roll over, or at least have a brief pullback. So we want to be aware of that if you're into a long position and if you are trading in the afternoons. From 3:30 to 3:40, this is another area that I want to be very careful of for the setup prior to going into the close. 3:45, big money comes into the market. They're getting ready to move the market. You want to be, if you're going to jump into a trade, watch the manipulation. Watch your indicators that indicate strong trending time frame. This is another opportunity for you to make some good coin. If I'll step in, generally I'll step in around 3:20 to 3:30 to 4 o'clock if I trade the afternoons. Okay. Jesse Livermore. Throughout all my years of investing, I found that big money was never made in the buying or the selling. The big money was made in the sitting or the waiting. This is critical. I have this in every single one of my presentations. The big money was made in the sitting, the waiting. Because we're waiting for our indicators to give us a heads up, say, this is a good time frame to get in. This is a good time frame to get out. If you don't want to use a time frame, at least watch for whatever system you're trading, watch for the indicators to line up. You're establishing your own discipline. If you apply the clock method, you now have watching for a setup to go with the time in your trend direction or whatever direction your market's telling you. 5 key elements. Here we go. Time. The summary. Trader sharks consider time a critical element in determining when to enter and exit trades. Market condition. I know this is going to sound elementary, but you would not believe the amount of people that miss the trends as they're going up or going down. Market condition. There are 4 possible answers. 4? I thought there were 3. No, there's 4. Watch this. Trending up, trending down, not trending or consolidating, accumulation phase, right? No, that's not my son, but I thought that was a cool picture to mention the other. Everybody wants to know what the other is, right? That's sitting in the back of your mind. Trending up, we know what this is. Higher highs, higher lows, pretty standard, right? We understand that. Draw a trend along the feet. Look at this as an escalator. A trend along the feet in an uptrend. Downtrend, lower lows, lower highs, lower lows, lower highs. We draw a trend along the heads. In a downtrending escalator, we draw a line across the heads. Consolidation, accumulation, they are different, but consolidation and accumulation look the same. They don't act the same, they look the same. So watch this. These yellow lines we have in our charts are generally the opening range. If you've got this type of movement inside your opening range, you've got a fairly sideways. You don't know the distance between these 2 bands. We could have a lot of sideways consolidation, maybe a no news day, something like that. 4.5 point day range. You know, you may be able to scalp out a 2 to 4 ticks, maybe. But this to me is a rough day to be trading. I want you to notice the colored candles. They are not Heikin-Ashi candles. They are not. But you can certainly use Ashi candles to help with your determination of the trend, right? You think maybe you can scalp out a little bit. These horizontal lines are called shark bands, and we try to trade between them. So if you wait for an opportunity to break above that, you think that this black area up here is called open water. And so you'll hear the terminology. If you come and join us tomorrow, we have a free trading day. You're going to hear us talk about open water. The markets can stay irrational longer than you can stay solvent. One of the traders in my room gave me this, and I go, this is awesome. John Maynard Keynes. Momentum. Steering wheel. Love it. A steering wheel will give us a direction, right? A directional indicator. I use the ADX, the average directional index. I use the ADX. Okay, so steering wheel will give us a direction. Is it going higher? Is it going lower? Is it below threshold, which is kind of a flat day? Now, if I've got a direction, how do I know if I have momentum or acceleration? Right? These are accelerators. So if you've got a direction and you've got a momentum for accelerator, you've got a nice little plan. You can use your own indicators. Momentum, you can use momentum indicators, you can use stochastics, you can use CCI, whatever you wish. Directional indicator, you may have other directional indicators, but you use a sweet combination between these two. Direction, you got to know, is that direction going straight or is it parked? Okay, and then your momentum. If it's parked and you got momentum, where are you going? You're still going nowhere. That's like stepping on the gas with your foot on the brake. Okay, so these are the charts. In the room, you will see, when I'm talking about momentum, you're going to see two time frames. I would recommend no matter what you trade, whether it's stocks, options, futures, you use at least a minimum of two charts, higher time frame, right? So we're not a swing trader, but the higher time frame chart gives us kind of a reversal, and then we look for a pullback on our lower time frame charts to take advantage of the same direction, right? So these down here, this is our momentum indicator. I use the CCI. You got a nice trend line break. The anchor chart sets up great. Look at the time, 10:02. And look over here, 10:04. The lower time frame chart's occurring in the same direction. This is a nice entry. We may not get this full run, but we may get 2, 4, 6, maybe 8 ticks out of that trade. Patterns so far: time, market condition, momentum, patterns. You all know the patterns, but I'm going to tell you anyways. Divergent top. You can call it a double top. Divergent bottoms. Right? If you have a momentum indicator that's going the opposite direction of your price action, you have a divergent top or a divergent bottom. Wedges, triangles. Just to be aware of the basics. Be aware of and you can Google any of these patterns and learn more about them if you like. Head and shoulders. Awesome pattern. Gives you awesome targets. Inverted head and shoulders, right? What patterns do we use? Oh, I'm sorry, I forgot about this one. The other. Nobody reminded me. The other megaphone pattern. I don't know many people that talk about that. It's called a search and destroy algorithm. Inverted wedge or broadening top. What's it look like? It looks like this. Higher highs, lower lows. Higher highs, lower lows. By the time you fit, I do not like this pattern. This is a tough one to beat. By the time you realize that you're into this pattern, you tend to have been stopped out a couple times, right? We get a breakout, or you have a wedge pattern. You can have just one thing I would tell you on this: watch for the fifth touch. 1, 2, 3, 4, 5. Reversal, break to the opposite side. That's what it looks like in real time. I'm sorry, in actual price action with candles. And there's my smiley face. Shark Den patterns. These are some of the things you'll hear tomorrow. We have what are called wave trades. We have dive trades. We have hook patterns, kind of a modified flag pattern. It's got to meet the criteria. Attack zone trades means pullbacks. Shark attack trade setups, and I think maybe you saw that the other day. The video I just sent out last week. Support and resistance. So again, we got time, market conditions, momentum patterns, and support and resistance. And I really don't care what you use as long as you use something that's proven. Support and resistance levels, we call them shark bands. You can call them whatever you want. You can use pivot levels if you like. Just make sure that you've already tested them before you use them. Master the basics, you will master the arts. What are support and resistance levels? You may be surprised when you hear this. Many traders believe that a previous high or top is a resistance level. Is it really? I mean, is it a resistance level or is it just an area of interest? A previous low or bottom is a support level. This is what they believe, right? Not necessarily. This could be a standard trading day. These are the shark bands. And I want you to notice, I'm going to bring in some words here. Resistance. Really? Well, if it is, how do you know? There's no prior high. Support? Okay. But again, we don't know because there's no prior low. The correct way to determine a support level or a significant level. Remember this word, significant level. When a previous high is penetrated, that high becomes support for the move higher. Ooh, think of that for a second. When a previous high is penetrated, that high becomes support for the move higher. Ooh, cool. In other words, the old high becomes the new support level. The old high becomes the new support level. Now that's something to think about. So if people think this is support, put this in your arsenal of trading ideas. A prior high becomes, is it resistance? It could be. You may not want to be entering a trade until you get up here. To me, I would not be entering a trade long until I got above a shark band, pulled back, and I'd be looking to go long here, above a shark band in an open water area. But look at this. Prior swing high becomes support. Prior swing high becomes support for continuation higher. Pretty cool stuff. The correct way to determine a resistance level or a significant level is when a previous low is penetrated, that low becomes a resistance level for the move lower. Makes sense. In other words, the old low becomes the new resistance level. Let's look at this. So the prior swing is no longer the support level, it's the resistance level. Okay, this is a failure, right? You're not going to have 100% success every single time. Prior swing low becomes resistance. Prior swing low becomes resistance. Just try to apply this tomorrow, okay? Support, resistance levels. Good stuff. How does the shark den work? You guys like that picture? Got this guy on an island making a living, enjoying the sun, but he's got sharks surrounding him. That's kind of like where we are as day traders out there against the big boys on Wall Street, right? Crash course. What you will see in your free trial tomorrow. Certainly you're going to see price action. You're going to see your CCI. You're going to see shark bands. The shark bands are absolutely awesome. We use those for support and resistance. We trade up to those levels. Up to those levels. We also use them as resistance levels to trade off of them to the downside. Okay. You're going to see an opening range. You're going to see yellow lines. What is that? That's the opening 15-minute range of the day. From 9:30 to 9:45. After 9:45, those yellow lines become permanent and they don't move. This is a great opportunity. We know that between the yellow lines it tends to get choppy. Now we apply the shark bands with the yellow lines. Pretty cool. So we've got this opening range. Gets a little bit choppy. Get outside the opening range. Look for a little bit of a pullback. Where would you get your trade? Well, you may have an opportunity to trade long in through here. But this would be more an ideal situation right there. Right? You get out of your opening range, pull back. I'd be looking to go long right in through here. It depends on how long you hold it. You know, and I'll tell you in the shark den when we're in there, I'll tell you why I'm going to hold and when. We also have these wonderful little things called our indicators, bright red or bright green dots, right? They kind of give you a little bit of a heads up to kind of look. When that green dot pops in, hey, I may be looking to go long. Red dot pops in, well, if you're above a moving average, do you want to be taking a red dot short? More than likely not. Want to take a red dot short? No. Do I want to take a green dot long? Yeah. Green dot long, yeah. Pretty cool. All right. So we apply some moving averages in here, and we use those mostly because a lot of other computers use those as well. Whether they're using simple or exponential is irrelevant to me. We have this is called an attack zone. So when price action pulls back into the attack zone, we are looking for reasons to continue higher. Continue higher. Do you want to be going short in through here? No, of course not. So we combine the moving averages with support and resistance levels. So far, so good. Are we always going to have trending time frames? No, we are going to probably have trending time frames maybe, if we're lucky, 70% of the time. My apologies, 30% of the time. 70% of the time, you're going to have sideways consolidation chop. So is it okay I think a lot of new traders will try to buy into a position and hold to make their 1, 2, or 3 points. And inevitably, they'll get the pullbacks and stop them out. So we have to understand those time frames when the market is trending in a time frame between shark bands. Trending in a time frame between shark bands, you've got a nice little plan. Repetition is the mother of skill. Tony Robbins, one of the world's greatest life coaches. 5 keys, let's review them. Time, trend or consolidating. Can you determine a trend? I just showed you how to draw lines across the feet or across the head, right? You know the clock. You're watching that continually. You know the trend. You've got some momentum. Is the momentum going to go with you in the direction of a trend, or is the momentum going to die out in a consolidating time frame? Patterns. We cannot ignore patterns. Patterns have been consistent as long as trading has been in existence. Support and resistance levels. So now we've got the whole gamut. You've got support and resistance levels, the areas that you're trying to get to or from. You've got a pattern on how to get there, and then you're looking to apply a time frame. So far, so good. How do we put it all together? Now I'm going to show you some screenshots of the Shark Den. I refer to my higher time frame charts as an anchor chart. I refer to my lower time frame chart as a trigger chart. Anchor, trigger. Anchor chart, because that's kind of the swing chart. That's the one. I'm not going to expose what the settings are. I'm not going to do it today. I'm not going to do it tomorrow. If you join us, then you'll certainly get those settings. But the idea is a higher time frame chart. You wait for that to set up, and then you look for a lower time frame chart to duplicate that setup, or at least pull back to take advantage of that move. Let's see some more screenshots. 10 o'clock. Ooh, this is a reversal zone. Good to know. What indicates a reversal? I'm giving you an entire class here, about a 2-hour class in about 30 minutes here. So hopefully your mind's not swimming at this point. There's your prior swing level. This is called a significant level, right? We called it a prior swing high. This is called a significant level. If price action comes back and breaks that level, which it did not in this case, you have a reversal and likelihood's continuation lower. That is a reversal. So we actually know a reversal before it occurs? Well, it's got a little bit of a move before it breaks this significant level for continuation lower. But what it does do is give us an opportunity. It never broke this significant level. We may have an opportunity to go long, while everybody else is trying to go short. Is that pretty cool also? Now, it did break the significant level over here, but it broke it at around 10:20, not at 10 o'clock. 10:30 continuations, very similar situation, right? You've got trades between the shark bands, pull back and go. I don't want to place a trade inside a shark band. I want to place a trade up to a shark band or away from a shark band. Does that make sense? Shark band, call it a resistance level, call it a support level, whatever you want to call it. Trade away from it or towards it, not while you're in it. Very similar. Shark bands, right? The shark bands are really cool. If you think that this is a support level and you already see it on your charts, you think that maybe this is a great idea, a place to get out of your trade, right? Okay, so you're going higher and you get out of your trade. Okay, so you just didn't make more profit. You at least were safe and consistent. Open water, black area, open water, shark band to shark band. Work your way up. What happens if you get out of the shark band, pull back and go? This is great, right? We're trading up to the shark band or away from the shark band. Away from the shark band. Same thing here. Here's your CCI. Got a momentum indicator. Oh, nice green dot. Fires off. 7 ticks. But wait a second, there's 9 or 11 ticks there. I don't care. I don't know what's happening to the right side of my screen. When the market sets up, I'm looking for a trade. I enter, I get my first 2 ticks or 4 ticks or 6 ticks, wherever my intended target is. And then my second target is given to me by an ATR, an average true range that I use. If your prior bars have an average true range of 6 ticks, I'm not going to be holding on any longer than 6 ticks because it'll reverse, come back, and stop me out. Another opportunity here. Nice trend line cross, nice little green dot, entry, go. Nice little trend line cross, green dot, go. This may have got a reduced risk stop, or maybe the ATR at this point was only 3 ticks. I don't know. Another opportunity. This is a little more aggressive. I don't know why it would have only been 4 ticks. Maybe I got stopped after the first contract. I'm not sure. This was a nice setup. Look, you've got your green arrow. Nice setup. I got to stop, forced out at -4 ticks on 2 contracts, -8. Hook pattern. Looks kind of like a flag pattern, doesn't it? The one condition is it's got to be outside this opening range. Okay, so watch for these, what are called hook patterns. Once you see one hook pattern, you tend, can you see it here? There's another hook pattern there. There's another hook pattern there. They tend to duplicate 2, 3, 4 times. Ooh, look at these, multiple contracts, multiple trades. It can get as simple or as advanced as you want. T1, T2, T3. On a hook pattern, your target's 4 ticks, 50%, 100%. Look at this. If you're a longer term trader and you are holding, it's amazing how these T3s are hit, but they're only hit 50% of the time. Right? 50% of the time. I can show charts after charts. I'm not going to get into too much detail. This is from today. This is a screenshot from today. You see your overhead resistance up here? How are we doing on time, Dave? Doing okay? I'm going to start answering some questions here in just a moment. We've got a shark band. Notice how these shark bands, theirs are drawn before the market even opens. Do you think the shark band posed resistance here? Think it posed support here? Resistance here? Support here? Pretty cool. What if you lined up your momentum indicator, right, for a long position? Would you have gone long into the shark band? No. Would you have gone long here? Nice opportunity. Hopefully, I'd like to get away from my my shark line. Maybe in through here. Or maybe there's no trade at all. This is the afternoon trading session. So, if you have any questions, I'll be happy to address those right now. If you'd like to attend a free webinar that we have going on tomorrow, simply go to tradershark.com. Tradershark.com. Go to the Home tab. You can go to the next live webinar. You're going to see this Tiger Shark presentation, and the webinar specials are there as well. I think I've got, there's a code on there. I think you use WEB, W-E-B, for your code. And you also can sign up for a free trial. You can email me if you have any questions, brian@tradershark.com. Let me see if I have any questions here. It's going to sound a little bizarre. I had eye surgery about 2 weeks ago. That's why, if you'll notice, the performance tab is not updated. I had a very surprise visit to get glasses the other day, and they said, you need to get to the emergency room. This is about 2 weeks ago. And I said, what? They go, yeah, you're about ready to lose your eyesight. How's that for a trader, huh? By 6:30, I was at the VA clinic, and by 8:30, they were cutting my retina. So a little bit blurry. Let me see if I can see. Is the replay available? Yes, it is. Dave's going to have that out. I think he said within the first hour. What happened?